Hello, good morning and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec. We have markets consolidating in front of the payrolls report tomorrow's crucial payrolls report, but also we had the added impact of Independence Day for the US today, big public holiday, no market moves on treasuries, no US futures steer. We're seeing consolidation pretty much across the board. Very little direction on equities, very little direction across Forex majors. It's a very slight move against the dollar for the euro rebound and sterling rebound, but other than that, we've not really got any real direction of any note whatsoever. The gold market, however, has been volatile in the last few days. Obviously, we had that huge rebound on Tuesday, bit of a retracement move yesterday, and that retracement move has continued today. So $5 lower is the only real market moving at the moment is gold. We've also got a little bit of a retracement move on oil. What we've seen in the past few days is that oil sharply lower, which actually, if you look on the WTI, for example, here, confirmed this downtrend move and the failure at the 55-day moving average. Interestingly enough, we're now seeing lower highs and lower lows on oil. Little move to the downside, rebounded yesterday, but again, finding resistance around that $58 level and pulling lower. So interesting that oil is starting to fall over a little bit again, and that's a reflection of a little bit of a retrenchment of risk appetite, perhaps. But what we do see is volatility on equity markets, which has fallen to the lowest since April, really, and that's come as the markets have basically taken on this increasing attitude that the Fed is going to cut rates. We had a slew of negative data yesterday for the US economy, and again playing into that whole outlook that the Federal Reserve is going to cut interest rates or turn around a rate tightening cycle to a rate cutting cycle in the July meeting. And that is going to be a reason to prop up equity markets, because equity markets obviously respond better in a rate cutting cycle. However, I would also add to that, as we've seen the S&P 500 breaking out to all-time highs yesterday, is this a case of chasing markets higher on the equities in front of this Fed meeting? Because ultimately the Fed is going to be cutting interest rates for a reason of cautiousness and concern rather than anything else, really. So I think that that may well play into a lack of real drive forward in equity markets in due course. However, at the moment, obviously, we've seen that break out to all-time highs on across Wall Street on equity markets in the European space. We've seen DAX breaking out, we've seen FTSE breaking out, but just consolidating a little bit today on that public holiday for the US. Now, in terms of data points today, pretty much nothing. We have very, very little on the economic calendar to take any real guidance from. So we're looking out towards my chart of the day, which today is Euro Kiwi. Now, we've seen the euro, which has fallen quite sharply across the Forex crosses, and that has now taken a really significant deterioration in the outlook on the Euro Kiwi on a medium-term basis. This range play, which had been pivoting around 169.30 as a basis of support, breaching that last week, finding that as now a basis of resistance. We've got this downtrend formation coming. We've got negative configuration developing on the across the momentum indicators. MACD lines below neutral. Stochastics negatively configured RSI dropping to the mid-30s. So it all sort of paints a picture, I think, of selling as a strength. You've got this rebound on Euro Kiwi today. I think this rebound is going to be seen as a chance to sell because you've got this pivot at 169.30, which is the basis of resistance overhead. Downtrend is being tested, but given how sharp that downtrend is, I wouldn't take any real steer of the fact that if that does get breached. But 169.30, I think, is a key level that we've got as overhead supply now for the Euro Kiwi. You can see on the hourly chart, 168.80 is being tested at the moment, just breaching through a little bit, and as the rebound has taken off a little bit this morning, but generally around this sort of 60-65 level is where we've seen the hourly RSI failing in recent sessions. and I think that this overhead supply between 68.80, 69.85, and generally around 69.30 is where we're going to see the next lower high, and subsequently this rebound is going to get sold into, I think. Now, in terms of support, you've obviously got the support at 68 figure in the last couple of days, but I think breaching on that to the downside, you're looking at 66.90 and then a move back towards maybe 66.30 area. But I think this is now moving into a corrective pattern. So with that in mind, I wish you good luck in your trading today. I think it's going to be a quiet day, but good luck anyway. And I will speak to you again later.